How's it going out there? It's April 21st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. In January 2020, the writing was on the wall. Just a matter of time before stocks crashed. Just had to open your eyes a little bit. And COVID was running rampant in China. Almost every American-based business that was in China was closing. They announced that they were closing. This is January, first week February. Market crash, what, the third week of February? And COVID was going crazy. Then you had Nike, was it Levi's, Starbucks, Yum Brands, all of them were locking down, were closing our stores. When you look at statistics, China accounted for 40% of the world's growth. That's according to the IMF. And it was completely shutting down in late January, early February. Our market here was at all-time highs, all-time high valuations as well. Things were pretty good, but you're trading at a high growth valuation, but you're removing the biggest component of growth. So what's going to happen? The market is going to come down. And we played it great. Get out of the market for the most part. If you follow my advice, following our newsletters. In March, you saw the market crash. Much, much worse than I thought it would be. And it came back a lot quicker than I thought. Again, I didn't know they were going to throw the T word out like crazy and spend trillions and trillions and trillions, because at the end of the day, you can't fight the Fed. You can't fight them. At least right now, you can't. They always win. They got a printing press. Remember David Tepper from 2010 saying the same thing. 2011, I think it was, saying, you know what's going to go higher with interest rates low, what the Fed's doing, inject the money. He goes, everything's going to go higher. And it made sense. You don't want to put your personal feelings involved and say, oh, I hate the Fed and what they're doing and it's terrible. No, if you want to go hold up a sign, hold up a sign. Go protest. Do whatever you want. Me, I'd rather make money. That's my job. That's why you listen to me, is make your money. So we saw the market crash in March. Predicted that COVID's going to spread like a wildfire through the U.S. Some great interviews that I share with you from people locked down in Italy and China. But when you see these things happen, there's signs. There's almost always signs. It's just you have to be looking at them. And those signs, it's a big signal telling you to get the F out of the markets now. Look at 2005. That's when Michael Burry started with housing. Said this subprime nonsense is a mess. What were they doing? They were giving teaser rates. That's what his original thesis was. He thought that the housing market would collapse. It went up tremendously in 6 and 7 before finally mid-7 started to collapse. But he was right, and he predicted around 2007 it would collapse. He was, again, prices surge, and he had a terrible position at first before being completely right, even though he almost lost his job and his customers. But he said, hey, these subprime loans, they're at a teaser rate, they're going to reset, and nobody can afford them. Then you had a couple of others really start digging in and saying, wow, these homes are empty. They're giving 5 homes to exotic dancers who, got the teaser rate and don't care. Again, everybody had 5, 6, 7 houses, nothing down. And they started finding out things about synthetic loans and said, holy cow, synthetic loans. And everyone was on the take. Everybody, all the banks were on the take. All the rating agencies were on the take. They had to rate the stuff. Hey, AAA. No, we're not doing a research. Just AAA. Pay us the fee. Everybody's happy. Everybody's happy until they're not happy. Then you saw the massive leverage. Banks leveraged 30-1. Are you kidding me? The Fed sit down, not even knowing that, not knowing what's going on under the hood at all these financial institutions. But the writing was on the wall. I mean, so the system was corrupt. But a lot of people got that right. Not a lot of people, but a few of them got it right. They saw it coming. There was just signs that they saw. It wasn't that difficult. It is. I mean, again, in hindsight, a lot of people, it's the difficult part is usually before markets crash, everything's fantastic. So it's very hard to see. This massive optimism, stocks are going higher, fear of missing out. I mean, that's not a new term. It's a new term for most people. Because they're young and FOMO. No, it's been around. Fear of missing out. Every bull market, every single one, same thing. Cab drivers, people don't know anything about, not that cab drivers don't know anything about stocks, but just people who don't were getting into stocks. It's crazy, but you see it. Happens all the time, but it's hard because, again, you have to be a contrarian. And you look at the 87 crash, so massive deficits, inflation out of control, super expensive stocks. We just had a bull market that ran from 1982 to 87, straight up. But economic growth started to slow, yet stocks continue to go higher, which is a little weird. Kind of what we saw in 2020 before the pandemic. Earnings started to slow in 2017, and then we had the tax cuts, which inflated those earnings, which is great for companies. But before that, we were seeing earnings slow considerably, but yet stock prices continue to rise. That's a recipe for a crash is coming. Then we had the tax cuts, and then we went through 2020, and we kind of saw that. Well, growth kind of slowing down a little bit. Economy's pretty fine, chugging along. Max employment, everything's cool. It's fine. And again, that's a recipe for disaster when you're seeing slower growth and extremely high prices. But for 87, again, a lot of writing on the wall. When economic growth slowed, expensive stocks. We had a lot of shitty deals with G5 nations to help depreciate the dollar in international currencies to basically help control our out-of-control debt, which is insane. But think about that, because those conditions, does it sound familiar? It does. This is coming from someone saying, listen, pedal to the metal, everything looks good. But a lot has changed over the past week and a half, a lot. And I've been spending countless hours researching this for you. And I wanted to open the podcast today because I'm worried. I'm really worried. You don't hear that from me often. I'm not hedging my bets here and saying, oh, this could happen or that could happen. The data I'm about to share with you is all fact. Someone who's engulfed in this market, knows all these companies across so many different industries, has great contacts. Thanks to you guys listening to podcasts. We have an amazing guest. We have one coming up later. But after I'm done telling you this, you're going to see why I'm worried. And you know what? I want you to send me an email and get your thoughts on it. Tell me what you think. FrankCurzioResearch.com. You could disagree. I say it to everybody. If you could disagree, disagree. Any people like, you're an idiot, Frank. You know what you talk about. Tell me why. Maybe you have a different thesis. Maybe you work in a particular industry. Maybe you know more. I'm not here saying it. I'm the end all. I'm the smartest guy in the world. Just listen to me and everybody shut up. No. I mean, the people I interview are brilliant. You kind of realize that you're not really that smart when you start interviewing for 14 years some of the smartest minds. You're like, wow, these people are really smart across different industries. So here it is. I think we could see a market crash, similar to what we saw in March, where the S&P 500 could fall 30% by the end of this year. I know. Let that sink in for a second. That's the bad news. The good news is it could be avoided. It could be avoided. I mean, this is not some crazy pandemic, black swan event. It's going to cause it. Our economists, our politicians, they have all the data in front of them where they can take the measures to stop this right now. And by stop, I mean contain the damage to where we will see a pullback this year. To maybe 10%, 12%. I mean, you look at that, the Russell's pulled off, 6% now off its highs. I mean, again, it's rent considerably higher, amazing higher. But we can contain the damage if we work now. Which I know what you're asking. What's the cause? Why is this going to happen? When is it going to happen? I think it could happen this year. And the cause of it, it's a word thrown around so much, so many times. Something you may laugh at because some perma bears have been making this argument since the 70s on why the world is going to end. And it never ended. We're all okay. Markets all-time highs. We did fine. That word is inflation. I know. Inflation. I heard it before. Oh, everybody tries to scare me about inflation. No, I never, ever tried to scare you about inflation. Ever. In 14 years I've been doing this. I said, hey, we're going to see inflation here or there, but not like, oh, whoa, you're in trouble, inflation. No. Things are very, very serious right now. I don't know if you've been paying attention to the data. I have. That's my job. And I'm not sure if the Fed and politicians understand what's really happening out there. What do we see? Wall Street Journal yesterday. Not enough home builders to build homes to meet demand? And yeah, we saw that during the credit crisis, but that's just one thing. And look what happened. Not enough chips being manufactured to meet demand, to where plants are closing to save costs. When have you ever, there's 25 years, when have you ever seen plants close? You got Ford, GM, lots of plants close because demand was too great. When have you seen that? See, that's what has me. When I see things I've never seen before, you always want to compare it to, look at the history and what happened during these times and inflationary times. And I've done that. I've done a lot of homework on this. I still have to do a lot more homework on it. But when have you ever seen those conditions? And when have you seen the PlayStation 5? Have you tried to get one of those? It's incredible, PlayStation 5. Went to Best Buy, by the way, the shelves were empty. There was no inventory. I sent pictures of that on my Twitter account at Frank Curzio. You go to Best Buy, I mean, they don't have any of the new items in. Everything's on backlog. But the PlayStation 5, I asked, I said, have you ever got a PlayStation 5 available like in this store? She said, no, not since Black Friday. They haven't even had them in the stores. Targets, Walmarts, none of them. Why is that? Why wouldn't you produce 10 million by now? You see the demand. Why? I don't know. Try to get an antminer from Bitmain. Good luck. The most powerful ones, that's what they use for mining crypto and figuring out the equations. This way they get Bitcoin or whatever they're mining. Or even crypto mining equipment from Taiwan Semi. Good luck. Taiwan Semi was like, nah, you know what? We're not going to go crazy this time because we got burnt already. 2017, it was, balls to the wall. We were generating $400 million just from a crypto perspective, which I think was about 10% of sales, which is amazing, in a year. And then what happens is they build inventory tremendously and the market crashed in 2018. So now, this time around, they're like, nah, we're not going to do that much. And those companies in crypto mining, man, I hope that you bought your equipment already, because good luck. I mean, that's how you generate profits in that industry, by mining. And the only way you can mine is by having cheap electricity and very, very state-of-the-art, super fast computer systems. But there's none available. You have Biden saying that, hey, we want to get into the semiconductor industry. We want to solve this supply problem. Really? You want to solve the supply problem? When has the government, any side, when have they ever done a good job running any business or any industry ever? Never. Their track record is zero. Zero. It's never happened. I mean, look at the post office. They lose $5 billion every year. Funny, because I don't see the same losses at UPS and FedEx. They run it because they have a printing press, and it doesn't matter if they lose money. You look at New York City. How is New York City in a deficit? I can see maybe now where people are living and you destroy the whole city and everything, and the politicians there. I get it. But you look at property taxes, 15, 20 grand. You look at the Verrazano toll was $19 to pass through. I mean, you're making, I looked this up, $4 million a day. It used to be you build tolls to pay for the bridge. $4 million a day. I think you paid for it already. Where's all this money go to? There's billions and tens of billions. I mean, you notice how there's never a surplus for any state? Why is that? The more money they make, the more they're going to spend. Spend like crazy. That's their job. Always, 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 always spend. Spend more than you have. You know why? Because it makes sense from their point of view, right? They're not going to have to pay for this. It's not their money. They're not going to suffer. They're trying to increase growth and give money to everybody so they get votes. The taxpayers are going to pay for it. Like they are now. Because we're going to pay much, much higher taxes going forward. I don't care if you're middle class, lower class, whatever. I don't care how much income. Everyone's taxes are getting raised. You're an idiot if you don't think that. You're an idiot if you're listening to your local politician tell you differently. They have to. Another thing that's interesting, not enough people in the workforce. We saw that restaurant owners looking to hire. Restaurants here where I live are operating at 50%, 60% capacity. You know why? They're allowed to operate at 100% capacity because they can't get people to work. They actually cannot get people to work. They're starting to raise wages, but it's not working. Now you have the Fed printing money recklessly, going nuts, absolutely insane. And I get it. Why? Because that's the playbook since 2008. And the goal was we need to inflate the markets, backstop the banks, throw tons of money into this system. We need to inflate the markets. We bring interest rates to zero, first time ever. We're going to inflate these markets. There's not one person in the world that's an economist or anybody that didn't think we'd see inflation over the next 2-3 years. And what happened is we really didn't see that much inflation, which is hard to explain. So inflation in some things, but overall, when you take the context of everything, we weren't seeing massive inflation. So they kept rates low for like 7-8 years at historical lows. They started to raise them, but now with the pandemic, they started cutting again. But that's a playbook. And there was no risk. There was no risk. Not only that, we're going to inject money, but let's buy treasuries. puts more money into the market. And again, print money, give checks directly to people, businesses, even banks. All that's been happening since 2008. That's the playbook, and there has been no risk to that. Is it that easy? Because if it is, why don't you just spend 20 trillion, 30 trillion, and 50 trillion? There's consequences to everything we do. And there's going to be a big consequence to this because now we're seeing it in the numbers. I don't know why it didn't lead to inflation early on, but the Fed still pedaled to the metal. Politicians pedaled to the metal. $10.5 trillion already injected to this market. $10.5 trillion, 50% of GDP, already injected into these markets. Stocks at all-time highs. Asset prices all-time highs. Economy starting to open rapidly. More and more people are getting the vaccine. Yet you want to inject another $2.3 trillion into the economy? Saying it's infrastructure? Even though, was it 11% is for infrastructure? Even though material companies are reporting insane profits right now that are greater today than they were pre-pandemic? Do we need the infrastructure bill? No, probably getting some votes. And what do we see what's going on today? Few people in the workforce. Why work when I'm getting a free check? This is leading to a massive, massive, massive labor shortage. You talk to any restaurant owner, the CEO in any industry. I mean, it's almost impossible to find good people these days, even in my industry. It's hard. It's not easy. I don't know if you saw David Halpern's at CNBC in that interview a couple days ago. He's a CEO of Jackmont Hospitality. That's a Atlanta-based food service. They have about 45 restaurants. He's looking to hire 800 workers. He can't find any. When have you seen that? He can't find any. Isn't that insane? Seriously, think back conditions when you've seen that, where demand is so great that supply can't even come close to you closing plants. You're only operating at 50% capacity because, I mean, usually you want to open up 20 different places. You can't find labor. So what happens? How do companies make their ends meet? How do they get open up? How do they increase capacity? Only one way. Only one way. Raise prices considerably. Wages, make it up with food prices or whatever. But you have to raise prices. And you know what? It's exactly what they're doing. Listen to this earnings season. Coca-Cola raising prices, first time since 2018. Netflix, numbers were great. They didn't meet their expectations, right? How would they? I mean, 8 million subscribers, during a pandemic, which is insane. They added 8 million, and they were expecting, 3.5, 4. It came in at 1, and a little bit more than 1 million, and people went crazy. But did you see the actual numbers? I mean, earnings blew it out of the water. Why? Because they're raising prices. The average revenue per user went up. Disney announced they're raising prices. They can afford to, since they're paying $2 for, every subscriber internationally. It's $14 for Netflix. I mean, Disney knows a playbook. Nobody cares about numbers. Nobody cares about profits. They're not going to get to pre-pandemic levels, which almost all these companies are already, for another 2-3 years. They sacrifice that. They just like, hey, people just want to see us get names on our list. Let's give this thing away for free, whatever. I got it for free. I'm a Verizon customer. I have it free for life. Isn't that insane? I have it free for life. Why? Because they can't show a decline in numbers, because then they're really dead. Because now you have no numbers. You're not seeing subscriber growth for Disney. And now you don't have the revenues there. You don't have the earnings there. You're still getting killed in most of your businesses. Procter & Gamble on its call. $200 million in additional freight costs. $200 million. They're raising price September, they said. Owens Corning, Hilton, almost every other hotel company, Genuine Auto Parts, almost every chip company, every drug company's raising prices on their products across the board. Every food company's raising prices. Hey, Dallas Fed, they have a manufacturing survey, and this is on Monday, showed almost 80% of factory respondents said supply chain disruptions have led to higher input costs. No kidding, we know that. But close to 50% said they're raising selling prices as a result. That number is going to be more like 75, 80%. You have to raise prices. I mean, look at commodities. Are you paying attention? I mean, how much oil has gone up? We see massive demand. Oh, but oil has gone up considerably. Look at lumber. Look at copper. Look at corn. Look at food. Look at tuition, your electricity bill, your phone bill, water bill. I mean, it's not just, hey, you're used to that increase every year. No, it's a lot more than that now. Go to your favorite restaurant. Order something that you ordered a year ago. I can guarantee that same order was at least 15% less than a year ago, and it's probably a much smaller portion. I can almost guarantee it. They have to do that. What does that mean? Inflation is here, guys. It's here. It's now. I don't think the Fed sees it or knows it. I don't think they have an effing clue. I mean, our politicians definitely don't know it or even care, right? Again, their job is just spend as much money and get votes and try to make as many people happy. And most of that money they print goes directly to them or the groups they represent, or it was lobbied for them. I mean, that infrastructure bill, again, what is it, 11% is dedicated to infrastructure? Give me a break. Politicians, no, they have no freaking clue. No clue at all. They're lawyers. They don't know about the economy. They don't know about stocks. They don't know about, none of them do. But I said earlier, the writing is on the wall. And why is nobody really seeing it? Because nobody knows what inflation actually is. When's the last time we had it? And people don't realize that that is the biggest risk to the markets by far. We just never had it. Yes, the Fed's goal has been to inflate the markets. Congratulations, it's here. But man, now it's time. You got to take your foot off the pedal because it's going to get insanely crazy. When you look at inflation, 70s, 80s, that's where we really saw it. But right now, people think inflation's great. Inflation's good. High inflation is the biggest risk. It's extremely, extremely, extremely dangerous. Again, conditions we haven't seen. You never heard me talk about this before. I look at the data and translate the data, and things that I'm seeing today I've never seen before in my 25 years that I've been doing this. I've never seen it before. But we're told, hey, you want to inflate the markets? Inflation's good, creates jobs, encourages more spending, more borrowing, more risk-taking. Look at SPACs, look at cryptos, more leverage. We're seeing across the board. That's what, fine. But runaway inflation? Again, the biggest risk in the world. Just ask Warren Buffett. I mean, he wrote extensively on this in the 70s and 80s. And then in the 90s, he really feared inflation was coming back. It also had a lot to say about it before the credit crisis. In those years leading up with that bubble. And he turned out to be wrong. Well, we didn't really have to worry about it. We didn't see it, so everybody dismissed it. But if you ask Warren Buffett today, what is the biggest risk to the market? What could crush it? He would say runaway inflation. I guarantee it. But nobody cares because, again, we haven't seen that. We haven't seen it. All investors in at least 15 years, 20 years. We saw a little inflation leading up in one market, in the housing market. That's what caused the crash. But runaway inflation, guys, is a huge risk. And when it starts, and why is it such a huge risk? Because when it starts, it's like a train going downhill. It's impossible to stop. You can't just, during the credit crisis, all right, let's inject the banks with, hundreds of billions of dollars. They're probably not going to use it, but it'll secure the banks, put more confidence in it. So, no, you can't do that with inflation. Oh, okay, let's just take inflation out of the market. It doesn't work like that. It's almost impossible. You want proof? Look at the 70s and 80s. Inflation just running wild, and we had terrible policies during that time. Terrible policies. And they're looking to achieve sustainable employment while achieving price stability. That's impossible. That's almost impossible to do. So we're seeing prices gradually going up, but our Fed today is like, okay, we're okay, because prices are only going up a little bit, and we look at a gauge that's, basically structured so it's almost impossible to see inflation. But now we're even seeing inflation in that index. That's a CPI. So what happened? 1979? Runaway inflation, 14% inflation? Nobody knew how to control it. And the policies in the 70s, low unemployment, strong growth, higher wages. In order to do that, you must have lower rates. And there's these terrible policies in place where inflation started going higher, just like today. It was like pouring gasoline on that fire. Making inflation surge. Again, almost impossible to achieve that sustainable employment while also achieving price stability. So Volcker said, you know what? F it. This is what we're going to do. I'm raising rates. Everyone's like, holy cow, you're raising rates. That's insane. It's going to slow down the economy. That's what you have to do. That's the only way to control inflation. Well, there's several ways. I'll cover them in a minute. Because the Fed said, I'm also going to buy bonds, which takes money out of the economy. And Volcker knew this is going to cause a recession. It actually caused two of them. The prime rate was over 20%, which slowed down growth considerably. But again, this is how you control inflation. These are the measures you need to take. You have to take a big step back which was very hard to do because everyone hated that guy for doing it because you're forcing businesses slow, you force less lending, less leverage. You need wages to come down. That's the way to do it. But with Falco News, that was good for long-term stability. Nobody thinks long-term today. No way. It's tomorrow. What's going to happen tomorrow? Biden, we need to get into the chip industry and fix it. Really? You're going to fix the chip industry? Holy cow. You should see the interview. Look up CNBC, and it is Rogers, who's the former CEO of Cypress Semiconductor. And listen to that interview recently. Unbelievable. Unbelievable. Fantastic. He'll tell you why the government shouldn't even go near the industry. And this is a guy that's testified before as one of the smartest guys in the industry. Incredible. But again, Falco knew you had to take that big step back. Now, when we compare it to today, what do we have? We're not allowed to have a recession. We're not allowed to have a pullback. We're not allowed. I mean, the pandemic forced that. But when we did have that recession, what happened? The government's like, here's trillions to everybody. You guys are fine. Here you go. Keep spending, spending, spending. So now we have inflation. And it's insane. And our government and the Fed, they don't want to take a step back. And they're throwing gasoline on this thing right now. And it's not good. And that's why I'm very nervous. Because we're seeing the writing on the wall. This happened in the past. We have a checklist of indicators that always warn us that inflation is incoming, could surge. What are they? Real estate prices soar every time. We're seeing that. Yes, we saw during a credit crisis, but not everything soared. I was like isolated to one industry, which was just filtered down. It was so leveraged, it almost blew up the whole entire financial system. You usually see stocks on fire, especially growth names. I mean, I don't know how many trillion-dollar companies. Did you ever think we'd have trillion-dollar companies like 5 years ago? Trillion-dollar companies? How many do we have? These companies are enormous. It's bigger than the GDP of like 80% of the countries. These guys, that's how big they are. And what do you see? S&P 500 at 22 times forward earnings. Very, very expensive valuations. You usually see commodities surge. Are we seeing that today? More than we've ever seen it. I mean, again, oil price. Have you seen lumber? It's insane, lumber. Lumber's insane right now. I mean, it is really insane. I told you the statistics. I think it's like now 10% of the increase in home prices is just due to lumber. I mean, the average home price usually increases by 2% averagely annually. With lumber, it's 10%. Are you out of your mind? You try to buy a house right now. I'm not talking about the major cities either, because that's going to be, everybody's moving out of there. But in Florida, you can't buy. If I move off the place I live because it's Amelia Island, I won't be able to get back on. I'm not kidding you. I won't be able to get back on unless I pay, twice the price for a house. But it's hours now that these things are flying off the shelves. But look at copper, guys. Look at corn. Look at cotton. Look at sugar. Most importantly, look at wages. That is the ultimate writing on the wall. Now, in April 2020, which is the Bureau of Labor Statistics, again, I'm not trying to bore you here. I'm trying to support, and why I'm so nervous about this, but this is only like the past 2 weeks, a lot of this data, which is just mind-blowing. Now, the Bureau of Labor Statistics, this is in April 2020, guys. So they reported year-over-year growth in averagely earnings. They skyrocketed 8%. It was the highest since they've been observing this since 2006, the highest surge. This was right before the pandemic. So we saw wages increasing. We also had the economy that was kind of slowing, not really growing that fast. And then we had the pandemic. Okay? Just everything forgotten. No worries. Market crashes. Now what does the Fed do? The Fed injects the money, $10.5 trillion. I cannot believe that. I say that all the time. $10.5 trillion for % of GDP. Now, everybody's saying on the calls, hey, we're getting back to pre-pandemic levels, which makes sense. We have most of the adult population, especially over 65. I mean, it's almost, I haven't looked at the numbers, 60, 70% that have been vaccinated. But you're seeing people getting vaccinated like crazy now. Unbelievable stats. Talk about that later with Daniel. So we're seeing the reopening trade. Again, it's pulled back a little bit because it's been up so much. But you have everybody sitting on tons and tons of money. So you injected $10.5 trillion. You're keeping interest rates low. You still said you're buying bonds. And you're announcing another $2.3 billion infrastructure package, which again has a little to do with infrastructure. What do you think is going to happen? Wage growth is going to, it's surging right now. We're seeing it. That's why you can't hire people. You have to raise those wages. I mean, it's here. Again, that explosion in the housing market. Not enough builders to build homes. Supply of homes at an all-time low. What about import prices? That's a pretty big deal. The price of goods we pay from other countries, right? They bring their goods here, shipping it in. Last month in March, they grew 0.69%. You probably have no idea. Because whenever there's a 0 point whatever and it's an inflationary indicator, nobody cares. 0.69% is not a big deal. It's nothing. Nobody cares. You guys, I guarantee 99% of your listeners have no idea that import prices rose 0.69%. So you don't need to pay attention to it. That's the equivalent of 8.6% at a compound annual rate. 8.6%. You know how insane that number is? The core CPI came out recently and showed just a 0.34% increase. Again, no big deal, isn't it? Like a 2% number we should be worried about with CPI, right? That's what they ingrained in our head and in the world. 2%, as long as we're under 2%, we're a little bit above 2%. But yeah, it showed a 0.34% increase. At a compound annual rate, that's 4.2% inflation. Inflation is here and nobody sees it. Nobody cares about it. The businesses are screaming as loud as they can. We can't hire employees. Wages are starting to rise. They're going to surge past those levels pre-pandemic. And what else do we need to see? Home prices. What else do we need to see? I mean, how can't the Fed see this? 4.2% inflation? This is CPI. This is the gauge they look at. I mean, have you heard that number anywhere when they talk about the CPI? Anywhere? No, you hear, well, it's got to be below 2%. Nobody said it's 4%. Everybody still thinks that it's probably a little over 2. We're fine. They said it might go to 3. It's 4.2% now. It's going to be 6, 7, 8% soon. They have no choice. So what do you need to do right now, as of yesterday? Similar to what Vodka did. Use wage and price controls, but that's going to lead to a pullback and likely a recession. And lots of job losses. So our politicians are not even going to, no way, absolutely no way. You can't do this no matter what, no way. The politicians and the Fed are in bed together, so, no way, no way. You reduce the money supply by the Fed selling government bonds, just to take money out of the market, dollars out of the market, but the Fed said recently, we're still buying bonds. They're flooding the market with even more money at over 4% inflation. They're flooding it, pedal to the metal. Or they could directly raise interest rates, which the Fed can't really do and said they're not doing for several years. In short term, they could implement yield price control. I'm not sure what's going to happen if we see long-term rates rise, which we saw. They pulled back last couple of weeks. But they rose tremendously in such a short period. But there's no way the Fed's going to say, hey, we're raising interest rates. Or we're going to implement wage price controls. No. Because you know what that means? We have to take the punch bowl away. And we're addicted to the punch bowl. We all want money. We all want it. We're waiting for those checks. We're staying home. They're paying people for staying. Still, people don't want to go back to work because they're getting checks. Still. And more is coming. Because there's been no risks to spending as much money as you can since 2008. Since we injected the banks with capital. No risk. And you only learn from your mistakes when stuff happens and you go through that process and it really hurts you. It didn't hurt us at all. It made the big banks even stronger. They didn't learn a lesson there. But you have to do these things or we're going to see runaway inflation. And I can tell you, very few people outside of perma-bulls who have been predicting inflation since the 70s and 80s, and you know those names out there, I've been predicting it. But I don't think anybody sees this thing coming. The CPI over 4% right now, guys. Over 4% and a lot more money coming into the system. And this economy is about to boom. Everything is opening up. People are going to be buying everything. And people are paying these high prices. That's fine. But I truly can't remember another time in history where demand has been this great that supply is not even close to keeping up. You close plants because there's no demand to save costs. They're closing plants because they don't have chips. And they finally said, we're going to reopen them pretty soon. But think about that for a minute. When has that happened? When have restaurants said, I want to expand and open 40 restaurants? There's enough capital out there. And people give away hundreds of millions of dollars like nothing to companies these days. Look at SPACs and all that garbage. You're seeing that blow up now, which I told you would happen. But when have you seen these types of conditions? From a business owner's perspective, which is a lot of people out there that listen to this, from a business owner's perspective, how do you manage inventory in a period that's never happened before? And that's happened to Taiwan Semi. Again, they're not producing any more chips for crypto miners. They don't want to have these massive inventory levels because they got caught holding the bag last time in 2017. So how do you manage inventory levels? Because if you could manage inventory levels, wouldn't you think the Sony PlayStation 5 would be on the shelves? At least some people could buy it. You still can't even come close to buying it. There's still probably a 5-month waiting list. It's impossible unless you want to pay double on eBay and triple. How do you manage a business during these times? Pretty hard. My restaurants here, I said it earlier, there's several of them that we talked to operating at 60%. I'm like, 60%? No, we could operate at 100%. We're open in Florida, but we just can't find anybody. We can't. And what's the solution to this? What is the solution for restaurant owners? What's the solution for all of these people? What's the solution for Procter & Gamble? What's the solution for Coca-Cola? There's only one. You got to raise prices. You must raise prices across the board, but you must raise wages. You have to increase that. And that comes out to be a massive, massive expense. And that's okay right now because everyone has a lot of money courtesy of the government. But it cannot last. There's no way we could last on this trend. The data that's coming out, listen to some of these conference calls, listen to these companies. It's unbelievable of how much they're raising prices, and they need to raise prices. They're going to have to just increase wages tremendously to get more people to work for them. And again, that results in much, much more expenses, which is fine for now. But what scares the hell out of me, because what we're also going to see, which all of you know, is tax increases are on their way. Right? We didn't even talk about that. That's huge. You want to see how huge it is? Look what happens when we cut taxes for businesses. The market surged. Look at profits. They went from barely growing to double-digit growth immediately in 2018-19. So, big deal. Now you're taking that away from companies. You're raising taxes, even on individuals. But it's not a pretty picture any way you look. Actually, I'd say it's as ugly as it gets. And it's difficult to believe, and it's hard to see because everything's at all-time high. You could buy Dogecoin and be up 400% in freaking week. Who cares about anything else? I mean, it's awesome out there. Just buy whatever, and it's going to go higher. Buy assets, NFTs, which, again, Rob Gronkowski without an NFL logo, spiking a football I could see 5 billion places, but hey, people are going to pay 20 grand for it, 30 grand, 50 grand. I think he sold a lot of his NFTs for about 1.6 million. Amazing. Pretty cool. But this is the playbook. This happens before every single crash. Every single one. Everything is positive until it's not. You see strong growth year over year because it's compared year over year to a period which was terrible in the pandemic. So you're going to see GDP numbers, 5%, 6%. That's fine. We're not going to be like that next year. No way. Absolutely not. It's going to slow considerably. Earnings and sales, especially go double digits this year, makes sense. Again, year over year, makes sense. They took a big step back. 2022, that's not going to continue. And you know as well as I do, what is the market? The market is forward-looking. So 2022 is here, according to the market. So you guys got to be careful out there. And it's dangerous. But the market, if you look at recent earnings, they may have already figured this out. Since companies are blowing away estimates, some of the ones that are blowing away estimates, what are you seeing? You're seeing their stocks actually pull back. J&J, Procter & Gamble, Lockheed Martin, all blew out their earnings. Their stocks pulled back. And then you have companies like Netflix, who did not meet earnings, and it got nailed. So for me, at this stage, I'm doing more research on it. Looking at the best ways to play it, the best ways to position yourself. Again, it's something that could be corrected if our politicians, which is asking a lot and probably never happened, but the Fed and even the Fed governors, they have to see this. They have to get out there in the world. They got to stop closing themselves in, locking themselves in rooms and just bell curves everywhere. And you got to talk to people. You got to see what's going on. That's great about this podcast. You guys email me, Frank Curzio Research, all the time. You see what's going on. You're seeing prices being raised across the board. You're seeing wages go up. All these are signs of massive inflation is coming. We haven't seen those trends. We haven't seen those trends in a while. We haven't seen a real estate bubble in a while. Now we have real estate bubble, which it's going to get bigger and bigger and bigger. Look at collectibles. Look at everything. Look at the prices. Just look at the commodity prices. Again, these are all things. These are perfect signs. You could see the writing is on the wall. And it can get really, really ugly because if you go back and look, listen to Warren Buffett, listen to the times of high inflation, it takes 5, 7, 10 years to stop it. It's not something that you could stop immediately. And it's here and nobody really sees it. The people in charge do not see it. And that's what scares me. Doesn't mean you can't make money in this market. I'm not telling you to sell everything. But for me, I'm digging even further. I want to listen to conference calls, much more. About 20% of companies report. I want to see what the rest of the companies are reporting. Banks reported very, very good results, trading activity and stuff like that. That's fine. But what's going to happen? As interest rates go higher, it's going to be a disaster. And a lot of these companies paying these massive wage increases, their profits are going to go lower. It's going to be an ugly market. The only way to cure it is to take a step back. Nobody wants to take a step back. We don't believe in that anymore. It's pedal to the metal. Anything that happens, we fix right away. We throw money at it. Well, here comes the consequences. Here it comes. It's here, it's now, and it's showing up on almost every single data point. So the Fed, please, I'm hoping that you're paying attention, because if you're not, the amount of money you're injecting into this market, the amount of time you're going to keep interest rates at zero, it's going to get worse. You're accelerating this thing. This terrible trend, you're accelerating it right now. You need to take the punch bowl away. I don't think they're going to do it. That's going to make me nervous. And if they don't, you're going to see me start selling a lot of stocks within our portfolios. Okay, guys, again, I want to do a lot of research on it. One thing I know for certain, you should be buying gold right now. Buy gold, because I don't think gold's going lower, but I do think it's going to go to $2,500. You say, well, Bitcoin's, but no, Bitcoin already made its move. It's made its move. Okay, you could say maybe it was an inflation hedge or whatever. I don't know, but it's made its move already. Maybe it goes higher, but gold right now, where it's sitting, you're going to see more money flow into. There's no leverage in gold. There's tons and tons of leverage. I mean, you own Bitcoin at any place and just look at the terms. You could leverage it. Holy cow. There's a ton of leverage in that industry. That's why if you see it come down, it's really going to come down. Okay, I'm a big fan of cryptos, as you know. I think it's going higher. But right now with gold, I'd buy the major gold producers, have a direct stake in gold with prices to protect yourself. Because if these guys get this wrong, it's going to be a disaster, and it's going to be a disaster for a very long time, and they're not going to be able to control it. There's nothing you could do about inflation. It's a super long-term problem, and you can't cure it by throwing money here and throwing money there. You actually have to do the exact opposite. And that's when things get really, really crazy. Let's get to my guest today, which, by the way, interviews being sponsored by blockchain.com, one of the most trusted cryptocurrency platforms in the world, over 70 million wallets and over 800 billion in transactions since 2011. Now, you can trade your favorite cryptos on blockchain.com, but you can earn up to 13% interest annually on your crypto. That includes Bitcoin, Ethereum, or stablecoins like USD Tether. So for more information, start your account, visit blockchain.com. That's blockchain.com. Awesome company. And yes, I am a customer. So this is a guest that you're going to be familiar with. But it's been a long time since I had him on to talk about one of your favorite subjects. I can't believe this is now in favor. It has been so out of favor for such a long time. That's uranium. If I do a video on uranium, I get tons of hits all the time. Uranium, everybody likes uranium. And that's Amir Adnani. Amir's the CEO, founder of UEC, one of the premier U.S. uranium producers. He's also chairman of Uranium Royalty, a new company that IPO'd in 2019. And if you own it, you're up tremendously on it, since it's the only uranium royalty company in the world. And the timing that he created this company is absolutely fantastic, which you're going to hear about in this interview. But Amir has been all in this industry for over a decade. He's one of the smartest, truthful people you will find. Even though he's a good friend, though, this is not a layup interview. Man, I know a lot of you are bullish on uranium. I have a big position in uranium personally, which I've been doing well on, as well as you guys. But I put his feet to the fire, because one thing that scares the hell out of me about uranium is you're not going to continue to see these stocks go up unless you see the underlying commodity go higher. You don't see oil companies surge if oil is falling and going below $20 where it's not economical. You need to see higher prices. When will we get them? Because if we don't, we're also seeing a small pullback in some of these names right now. But again, he's a friend. He's not on here because he's my friend. It's because I know he could help you make money, and he has made you money in the companies that he's been part of. But it's a full breakdown of uranium. If you own any stake in any uranium company, this is a must listen to. It's fantastic, fantastic. And you know what? Let's get to that interview with Amir right now. Amir Adnani, thanks so much for joining us on Wall Street Unplugged.
Hey, Frank. Nice to connect with you again. It's been a while.
Do you know how long we know each other for? I went back and I don't know why. Just the other day, it's sort of coincidence that we have you on, and I saw the picture of Timur. And when we were in New York City, that was, I think, like 10 years ago, right? When I met Mario Granero and stuff like that. I mean, it was a long, long time ago. That was one of the first times I think we met in person.
That's a good way of dating it because Michel Temer was the president or vice president of Brazil at the time. I think
VP.
One of the other.
He became president.
He was. You're right. That's
Yep.
right. He was VP and then he became president. It's sort of depressing in a way, isn't it? Not that was a long time ago. To look back at what it was like to be in New York City at that time. Like think about all the people, the bustling nature of coming and going, and just I talk to friends, and I know you have friends and family in New York City as well, and kind of what it is like now, right? And
it's sad.
It is kind of just.
And that was like in the middle of Manhattan in the heart Midtown. We were at the Plaza Hotel with a big event. I mean, it was really, really cool. We had a good time, and we went to New York City a couple of times too. It was just, it is sad. It really is sad that what happened. But man, we could talk about that forever. But I want to get something that's exciting.
I don't want to say that.
No, because the last how many years, right, since Fukushima, and I don't think people know how long you've been doing this and how long you've been involved in uranium, and just a testament to you, man. Because holy cow, I mean, being in uranium all that time. I always said, man, I wish you just picked another sector or anything else, because it's almost like being an executive of a coal company right now. So unbelievable what you've done with UEC. And let's start there. So Uranium Energy, let's bring everyone in. Tell us a little about Uranium Energy, maybe how it started, and we'll bring up all the fundamentals. And everyone that knows about this, just bear with us because we want to bring everyone in together for people who listen to this for the first time.
Well, in 2005, as an entrepreneur, I became very interested in what was happening at the time with the nuclear renaissance, which was everywhere back then in terms of meeting the needs of carbon emission-free electricity with nuclear power. And there was a real supply-demand shortage from a standpoint of how much uranium was available to fuel these reactors. The industry had been out of favor for a long time. And I know for those of you that know the uranium story today, this might sound very similar to what's been going on in the last 10 years since Fukushima happened. But in 2005, I had a very similar setup. And that really captured my attention. It captured my energy. It captured me as an entrepreneur to say, I need to be in this sector. And this sector at the time, I remember looking around, attending uranium conferences, and there was a real age gap. There were guys who had been in the uranium mining business for decades, and the sector really hadn't replenished its human capital. I remember the former chief operating officer of my company, Harry Anthony, who gave a talk at a conference in 2005 in Casper, Wyoming. And he wasn't our chief operating officer at the time. I just remember him getting up, looking around the room and saying, 20 years ago, I gave a talk at a similar conference of this. And 20 years ago, I remember looking around the room and I was the youngest guy in the room. And now looking around, I still feel I'm the youngest guy in the room. And I remember he said that and I looked around the room and I just saw a lot of white hair, right? And I remember thinking to myself, geez, like there really is a gap here. And then I went and met Harry and we teamed up and he was a key part of the UEC story and team as we built the company. And our focus was very simple, because the second thing that grabbed my attention was at the time in 2005, the United States was importing 90% of its uranium requirements. And everyone was rushing to Canada's Athabasca Basin to look for uranium, which is where all the high-grade deposits are. And I wanted to be a contrarian, not only a contrarian in terms of getting into a commodity that was out of favor, but paying attention to areas that were not as heavily populated by other players. And South Texas stood out. It had a long history of uranium exploration and mining, but you don't normally go to South Texas for uranium. You go there for oil and gas. I remember even in 2008, when I had a chance to meet George W. Bush his last year in office, when I introduced myself to him, I said, Mr. President, my company is looking for uranium and developing a uranium mine in South Texas. And he looked at me and he says, there's uranium in Texas? And remember, he's a former governor of the state of Texas, right? And so It truly was not an area or a jurisdiction that people thought of when it came to uranium, and we made a business out of that. And fast forward to today, what's interesting, Frank, is so it's now 16 years, right, since that beginning in '05, and what has changed? We went through just a terrible episode with Fukushima 10 years ago that was a setback for nuclear industry. But what is proven out of that a decade later is that nuclear power is truly safe, and it has to play a role if we want to meet our climate needs, if we want to decarbonize, if we want to drive more electric vehicles. We need to have clean ways of generating electricity. So it's been a journey over the past 16 years of just where nuclear power sits and how it's embraced today. There's been ups and downs. But what's fascinating is on the uranium mining end of things, in the US, we've gone from importing 90% of our requirements to 100% of our requirements. So that situation has only gotten worse. And in case of UEC, we're still rocking and rolling in South Texas. We're building a brand new project down there called Brook Hollow. We're investing money down there. We've been a part of the community down there for since the beginning of our company in '05. We've grown our business outside of South Texas. We're in Wyoming. We're in 5 other states. We have even a small footprint in South America and Paraguay. But we're very much today, I would say UEC is part of a narrative that has to do with if you're rooting for clean energy, if you're rooting for finding a way to decarbonize while at the same time look for ways to create more electricity, right? This is a mega trend, right? And as part of this mega trend, we need nuclear power because it is a large and baseload way of generating electricity around the clock. You look at climate scientists, you look at even the latest clean energy mandate that the White House put out, it includes nuclear power. And so the support is quite unprecedented. And this is where uranium comes in. We need uranium as the fuel to run nuclear power plants, whether it's the large scale plants or the small modular reactors that Bill Gates is putting a lot of his personal money into, backing companies like TerraPower and NuScale, who are the developers of the small modular reactor technology, which is a very promising area as well.
Now, you know what? Now let's get into, because you did a great job of it. So let's compare the markets. So today, what we're seeing today, which I think anyone involved in uranium understands, right? It's the under contracting by utilities, right? You have the under investments, you have, the low price uranium, and compared to what's going on, you did a little bit of that, but what stands out to you the most compared to now in 2005? And I think after Fukushima, so many of us, I mean, everyone who knows about uranium thought prices would come back so much faster. And, now we're seeing super low prices, again, under contracting. It seems like the same exact environment setting up where could it take 6 months? I don't know. Could it take another year, 2 years? It is going to happen though, right? It seems like, right. Just the under contracting it is going to happen, right? It's just, to me, it's almost like guaranteed. It's just a matter of timing, right?
The parallels are quite interesting, and they basically go like this, right? We had an epic bull market in 2006, 2007 in uranium market and uranium equities, and the market went from, there was 20 uranium companies in 2005 in the world, and by 2007, I think there were over 600 uranium companies in the world. Mm-hmm. Probably the combined market cap of all uranium companies went from $10 billion to over $150 billion in those 2 years. And the spot price went from $20 a pound to $140 a pound in 2 short years. Leading up to those 2 years, we had a situation where for a long time, there was a large amount of above ground inventory, secondary supplies that was basically being drawn down. And where it was coming from was basically a byproduct or side effect of the end of the Cold War. When the Cold War ended, beginning in around early 90s, the US signed a treaty with Russia called the Highly Enriched Uranium Treaty to dismantle Soviet-era warheads and take highly enriched uranium, blend it down to low enriched, and sell that into the utility market in the US to generate electricity. So the same warheads that were pointing at the US during the Cold War became basically the source of fuel to create 20% of US electricity, which is how much nuclear power supplies in the US. That program that basically was a secondary supply, and it took a long time for that to be drawn down. As we sort of came into 2006, we had this low uranium price environment for a long time because of large amount of secondary supplies, which meant there was a long period of underinvestment in exploration and development. And then all of a sudden, there was this positive attitude of embracing nuclear power, the nuclear renaissance of 2006, China, India, and all the emerging economies that really were transitioning hundreds of millions of people in their population into the middle class. That need for energy, that need for electricity was driving the growth of nuclear energy in those emerging markets. Bring it forward to today, right? You have some interesting similarities. The agreement between US and Russia, the HEU agreement, that ended in 2013. In the last decade, we had another type of secondary supplies, above ground inventories, that basically were the inventories of Japanese utilities that shut down. And they didn't need uranium anymore because of what happened in that country with Fukushima in 2011. So not only did we have above ground inventories, or basically uranium that the Japanese reactors didn't need anymore for the last decade, but we also had contracting that had happened in the previous bull market cycles that gave bigger producers prices at higher levels than what the prevailing spot price was. So they kept producing even though the market was oversupplied. Today, what we have is a situation where the above ground inventories have been drawn down, very similar to what was happening leading into the 06 bull market. The contracts that were in place for those producers, those hedges have basically rolled off and are coming off. And so there's a lot more of exposure to the spot price. That's why we've seen some large successful mines like the McArthur River mine in Canada shut down as a result of a low uranium price environment. And all of a sudden, we have this embrace for nuclear power, similar to the nuclear renaissance of 06. We have climate scientists, we have the Biden administration, we have green organizations who are embracing nuclear power as part of the solution to decarbonize and meet the net zero neutrality goals that corporations and countries are setting. And so some very compelling backgrounds, and the comparison there is compelling also on the supply side. Because of low uranium prices, there's been an underinvestment on the supply side of uranium as well over the last decade, as it was leading up to 2006. Leading up to 2006, though, there was a major mine that was being developed called Cigar Lake. And when it flooded, it actually became a catalyst for the market to rally. Ironically, this time around, there isn't a Cigar Lake to flood to be a catalyst, but that's actually the bullish point. There isn't a Cigar Lake. What do I mean by that? There isn't one very large mine that is under construction as we speak that can immediately come online as a response to higher uranium prices. Most projects today that are at a development stage, unlike 2005, are not even fully permitted yet alone being under construction. And so I think the comparison sort of between today and 05 leading up to those bull markets of 06, 07 is quite a compelling one. Obviously, as you said, we can't perfectly get to the bottom of exactly when we're going to have that inflection point where things take off. But there's a very compelling sort of scenario there. And I think maybe the only difference, Frank, is that while there was Cigar Lake back in 05 and there isn't a Cigar Lake today under construction, I think above ground inventories today are at a higher level than they were in 05. But I think those two things basically offset each other. And the situation in the US is quite compelling. In 2006, 2007 bull run, the United States Department of Energy was a seller of uranium from government stockpiles. In fact, part of the rally in 07 was capped when the Department of Energy announced they were going to be selling uranium from government stockpiles. Fast forward today, another big difference in a positive way is the United States government has announced a plan to purchase physical uranium to basically create a new strategic stockpile, the U.S. uranium reserve over the next decade. The Department of Energy is going to buy $1.5 billion worth of uranium. We didn't have that in 2006, 2007. They were doing the opposite. They were selling uranium.
All right. So before we go any further, do you remember this? So if you're on a Curzio Research YouTube page, I have a picture there where I visited your house and plant, and I'm holding, a little container of yellow cake. So I don't know why I have a smile on my face holding this. I never realized it, but anyway.
I think you were smiling because usually when you held that, I may have made a Texas proud comment by saying that the yellow cake from Texas is just a nicer shade of yellow than the yellow cake from elsewhere. And
that was great. That's great stuff. All right, so I had to put that
Texas, up. Texas yellow cake, baby.
Oh, that's great. That's great. So I want you talked about a few things here. And I can bring this. This is your presentation. This strategic uranium reserve, 1.5 billion program over 10 years, and 75 million in appropriation fiscal 2021. Where you guys are well positioned for that. Are you worried at all? Because in the past, Democrats didn't support uranium as much, and this isn't political. This is fact. But now, I haven't seen, and they control everything. I have in the U.S., all three branches of government. I haven't seen them really come out against this. Is this good news for you? Is this something we have to worry about getting reversed? Because I just felt like a Republican presidency was much better for uranium, but it seems like since this whole ESG push, that it feels like they're throwing uranium in there as well.
To begin with, I hate having to think that politics can play a big role in your business or in any business or sector, right? Because it could be unpredictable. It can take a long time when you're thinking about political catalysts or events or whatnot. But the fact of life in the nuclear power business is there's a lot of state involvement when it comes to nuclear power, not so much even in the US, but globally. Most nuclear power initiatives in the world, led by China and Russia, are all state-backed and state-owned. So, politics and big picture kind of issues globally do play a fact in our industry. Now, you said it really well. If you said to me, what does a Biden presidency mean for uranium mining and nuclear power before the election? I would have probably said not as certain as what I thought a Trump re-election and Trump presidency meant, which was a more clear stated position of support for nuclear power and uranium mining under Trump, and not so certain with Biden. And to everyone's positive surprise, as soon as right after the election and as Biden kind of people and administration came in, we saw the theme around why they were embracing nuclear power switch from national security, which was a big concern of President Trump, to meeting the clean energy mandate of the Biden administration. We saw the first time ever in the history of the Democratic Party support for nuclear power as a policy. We saw a bipartisan support for the approval of the budgeting, the appropriations for this U.S. uranium reserve passed very swiftly through the House and the Senate. I was a bit surprised at how fast and smooth it actually went. And this continued positive posture towards recognizing that, look, you can go after all sources of energy. And as you know, the Biden administration is not exactly a friend of the coal industry or the oil and gas industry or carbon industries. You can go after all those major sources of power generation and then also decide to cut nuclear as well, right? I mean, renewables on their own don't cut it, right? And you got to kind of pick and choose what lineup you're going to have out there when it comes to the energy matrix. And nuclear power is in there, and it's in a big way. And the reality is, it's the first time also in history that nuclear power is the second largest source of electricity generation in the US and the largest source of emission-free electricity generation in the country. So these are, I don't want to say too big to fail, but I mean, these are important weightings that nuclear power is playing towards meeting our energy needs, meeting our electricity needs.
Amir, when I look at this too, because not only that, and that's great for you, because I would have been a little bit worried about that, but it just seems like it's more favorable. You're right; they just can't take everything offline. But this
right.
leads to $64,000 question, which everybody knows. I know you've been asked this a million times, but you don't normally see oil stocks go higher without the price going higher, especially if it's under a price that's economical to produce, which say is, some will say $30 for oil, but basically it's like 1% of their wells. It's more like 40, 45. And I've been to every major shale oil and visit them personally. I hear it's around $50, $55 for uranium. We are at $29, $30. And everything is there. You see, limited supply. You know that these electricity companies are going to have to lock in contracts. So there's the demand, right? There's the demand picture. You've seen a lot of bigger mines come offline. It's just everything is positioned perfectly. China, more plants coming online. Japan reopening, more plants coming online. Why are we not seeing prices go higher?
We have to, I think, remember that with all the issues that happened around COVID, nuclear power plant owner operators, the utility companies, had to really first and foremost think about how they're going to continue operating in a COVID world. And that came number one, preoccupation and priority. Prior to that, prior to COVID, we had a whole bunch of political matters that had to resolve: the Russian suspension agreement, the trade remedies that were being introduced about possible sanctions or quotas for uranium coming into the US. So we've had, in my opinion, both political distractions and COVID-related preoccupations over the last few years that has kept the utilities back from entering into the next contracting cycle. The uranium market functions this way: 85% of all volume is by way of long-term contracts. The spot market only makes up 15% of transactions. So for you and I to look at, let's say, $29 per pound spot market, it's really just I don't want to say it's just a number, but it's not where the volume is transacting at. The average uranium price that a U.S. utility paid under contract last year was $40. The average uranium price that was contracted in 2010's run pre-Fukushima was $70 per pound. Utilities will lock in pricing under long-term contracts, and that's 85% of the market on a volume basis. And remember, uranium pricing makes up less than 5% of the overall costs to operate a nuclear power plant. Unlike, let's say, natural gas pricing, which makes up over 70% of the operating costs for a gas-fired power plant. So the nuclear utilities have traditionally entered into these contracting cycles that has then been the driver of the spot market. 2010, when we went from $40 a pound to $70 a pound in a matter of 6 months. 2006, when we went from $25 all the way up to $140 a pound by 2007 in a matter of 2 years. It's the utility contracting cycle that drives that. So while there is a spot price right now at $29 per pound that and I know uranium miners can't make money at, it also isn't a price where there's available abundant supplies that utilities can buy and contract for at 29. For that to happen, there has to be a bit of price discovery. And I think that price discovery will lead us to 50 to 55, as you point out. Why? That's the incentive price based on most available economic studies. That's the price where the bigger companies like Cameco and Kazatomprom had hinted would be the level where they might restart some of their operations. And frankly, if we look at this, there's also been a lot of inflation out there. There's a lot of inflationary pressures that the uranium mining industry won't necessarily be shielded from. Everything costs more right now, especially in a post-COVID world, from labor to equipment to supplies. And so for the bigger, larger scale mines, not the in-situ recovery operations that we're tackling, which, as you visited and know, really isn't mining. We're moving water around, and it's not an earth-moving exercise. But when it comes to conventional mining, where it's an earth-moving exercise, you factor in all the inflationary pressures that are out there when it comes to mining in general. And I think we're going to have to see a higher uranium price than maybe even 50, 55 before you see project development to then satisfy the needs of upcoming contracting cycles that the utilities are going to need to have bigger volumes of uranium. So Frank, to give you perspective, the total cumulative deficit for uranium in the next 4 years is about 200 million pounds. By the end of the decade, it's well over 330 million pounds is the supply-demand deficit. And an average, some of the biggest mines coming online might, or the biggest mine, let's say, coming back online, like in McArthur River, McArthur River might produce, let's say, 20 million pounds. That's an exceptionally large mine. That's not going to necessarily add up to be entirely on its own satisfy what the supply demand deficit looks like out over the next 4 years or to the end of the decade. And I think uranium mining, people got to remember, it takes a long time to permit these uranium mines, longer than a copper or gold mine, because of all the extra layers of licensing that uranium mining has associated with it.
No, it definitely makes sense. It definitely makes sense. I think we are eventually going to see. I didn't know the spot market. I mean, the spot market obviously was lower, but I didn't know they're locking in at 40. I thought he was even below that price, which is a pretty good sign.
Not locking in at 40. That they were still paying 40 based on contracts they had entered into previously, right?
Previously,
and so what I'm saying is that when you look at what the contracted deliveries that they're receiving larger amounts of supply on there, what that implied price is, it's at least 20-30%, in some cases 50% higher than what today's spot market is. And spot market simply doesn't have enough available liquidity or supply in it where a utility that needs to buy 5-10 million pounds can go and secure that. Look, case in point, our company, Uranium Energy Corp, recently we announced an initiative to purchase physical uranium. And we did this because we see spot price at $29 that we just talked about being well below most industry mining costs globally to mine uranium. It's about almost our own all-in cost could be just around $28-29 per pound to mine uranium. So we recognize that this was a strategic time to take advantage of strengthen our equity valuation to buy physical uranium and build a physical inventory program. Well, when we entered the market looking for just 1 million pounds of uranium, and that's basically enough uranium to run 2 reactors for 1 year. And there's close to 94 reactors in the US. Okay, so just enough uranium for 2 reactors, 1 million pounds we went to buy, and that moved the market 10%. So the spot market is tight. And it's when you have a market where the future supplier, a company like ours, is actually on the bid looking to buy uranium, and other developers or producers are doing the same thing now, it's a messed up picture. How many other industries do you know, Frank, where the suppliers are on the bid buying the widget or the commodity that they're supposed to be producing?
Mm-hmm. Yeah, no, it's a great point. It's a great point. And we talked earlier when we started this off of how long, you've been at UEC and well-positioned right now, as you just explained, fantastic. But also it led to you starting another company, Uranium Royalty, which I think at the beginning of this, a few years ago, people probably looking going, Uranium Royalty. I mean, you see royalties all over, right? You even see them in the healthcare industry. We know gold, silver, even copper and whatever. But now we're seeing it in different industries because it's an amazing business model. But you said, Uranium Royalty, now's the time to do it. And right out of the gate, I mean, this company is, I'll bring up a chart here. This company, this is a 5-year chart only because it'll go out to exactly where you guys, came out and went public in 2019 and look at the price. But you guys came right out of the gate with some really cool announcements. I guess give everyone a quick, elevator pitch on Uranium Royalty, what made you start it. And man, I think people were surprised right out of the gate with those major announcements.
The royalty business model, especially in the gold sector, has proven to be an effective way to build companies that end up with exposure to not only the underlying commodity, but also they end up with that embedded optionality that we look for when it comes to exploration, embedded optionality when it comes to expanding profit margins or just operating margins when a commodity price goes up and you're operating a mine, right? And why is that? When you own royalty, and royalty is basically a contract, right? And when you own a basket of these contracts or royalties between the royalty company and various miners and producers and operators, you're getting a fixed percentage of their revenue for the life of mine, including exploration upside or success that operator may have. Except with the caveat being, we're not on the hook as a royalty owner for any, and I mean any, of the capital investment and the ongoing costs associated with mining, all the time, energy, and effort that goes into doing that. And so that's why you look at companies like Franco-Nevada, Wheaton Precious, Royal Gold, in the gold sector, and these companies trade at 3 times NAV, where the producers trade at 1.5 times NAV. They trade at better cash flow multiples, partially because they don't have the big capex lift the miners typically do, and they can operate with such small G&A. You can run. I think Wheaton Precious Metal with a 30 or 25 billion market cap has a total of 30 employees.
Yep.
It takes 30 employees to run an exploration camp, yet alone a mine. And so we looked at this model and just felt like with the bear market we've been in uranium, there hasn't been active interest in the uranium sector to build a dedicated royalty company, but that the next 10 to 20 years, there is going to be the need to build and operate and finance many new mines to meet this growing demand for uranium and the deficit that we talked about. And so it really felt like the right point in the cycle to come and launch a pure play royalty company focused on uranium only. There wasn't anything else like it out there. And we felt that this could only be done by uranium people that are in the uranium business with knowledge of the industry, that understand where the opportunities lie, understand the nuances, the difficulties, the technical issues around uranium mining. And so this was all the genesis and the reasons behind forming Uranium Royalty Corp, taking it public. There was also a key benefit in this to Uranium Energy. Uranium Energy, along with other companies like Altius, which is a big diversified royalty company, and Mega Uranium, a number of corporate backers got involved early on with Uranium Royalty. And it's been through a huge benefit for us at Uranium Energy. We have an equity position in URC. We own 19% of the company that is now worth close to $40 million, right? And we basically took stock in exchange for a few non-core royalties to establish that position. So we've done very well with that at UEC. But at Uranium Royalty, being the first and only publicly listed uranium royalty company has meant we have a first mover advantage, and we've capitalized on it. We've gone out there and recently acquired royalties on the best uranium mines in the world, Cigar Lake and McArthur River in Canada. Your counterparty is Cameco and Orano, two of the biggest uranium miners in the world. These deposits have produced, or collectively, when they go back into production, Frank, will be 20% of global production. And we have royalty exposure on these type of world-class assets. It would be impossible today in the gold sector or the copper sector for a new company to go out there and get a royalty exposure on the best assets, the tier one assets of gold and copper. So the fact that we've done this in uranium speaks to that first mover advantage. We've acquired physical uranium. We've acquired an equity stake in a London Stock Exchange listed company, Yellowcake, that has a 10-year billion-dollar physical supply agreement with Kazatomprom. That's the world's biggest uranium miner. We, in fact, can purchase physical uranium under that supply agreement, and ended up doing that recently, and we ended up realizing a 7% discount to market by having this strategic supply agreement. So it's a very interesting way of playing the uranium sector, right? You can, when you think about uranium, you can look at a company like Uranium Energy that's focused on the U.S. production business. You've got ETFs that just buy a basket of equities, but the royalty business goes a bit further, right? It sort of sits in between all of that, because by having that direct exposure to the top line, you're getting direct exposure to each deposit's operating success, exploration upside success, and the fact that again, you're not paying for any of it other than the first purchase price to acquire the royalty. Any of the ongoing costs associated with mine development, a royalty company is not responsible for. So it's a very cool, elegant business model. And the team that we've brought on board are individuals who've spent their entire careers building uranium mines, exploring for uranium deposits. So you've got also a very uranium-specific team coupled with financial expertise and experience who's now out there building uranium royalty further. And I think it's a very interesting way to play uranium, and it's the only royalty company out there in the world.
I commend you too, because you brought up gold royalty companies, the Franco-Nevadas, I mean, Sandstorms, you go on and on, name 10 of them. But the way that they make their money is during bear markets, right? Because they're able to get a piece of amazing, amazing projects. And when you look at gold and some of these companies that were close to going under, they were so leveraged, right? I mean, the majors were in big trouble, 13, 14, that, they were looking to finance. And this is a way to give. Now today, they're the strongest companies in the world. They're amazing, producing at $900 and they don't need to give away anything, but it's hard to find projects. Same with uranium. When you came out with this, it's, getting stakes in Cameco. If you're going to see the price go to $70, $75, you're not going to be able to get, it's going to be much more difficult, right? So you're just coming in when you came in, and this is, I don't want to say 2018. You're probably talking about a little bit before that. It's really incredible. And just to see, I mean, it's got to feel a lot better with this company compared to, UEC or gold where those trends just lasted, it was such a bearish trend for such a long time, right? That it was crazy. But, look, we wanted to keep this at 30 minutes. We're going a little late. I'm going to ask you one last question here because we really covered uranium to death. If you had to do it all over again, one of our closest friends, one of the people that we follow for all of our lives, was Rick Rule. Says, I think he was the one that said, either be a contrarian or die. Would you choose to be a contrarian since you're a contrarian? But yet, it took a long time for uranium to come back. It took a long time for gold to come back. Or would you do it differently and be like Disney, get into streaming late and watch your stock price triple in a year, which, they might get hurt later on. But to do it all over again, what would you do? What would you choose? Would you choose to be contrarian all day?
I think to be a contrarian, you have to be comfortable in your own skin. You have to really have, I think, the passion for being a contrarian, because otherwise it's very difficult. I mean, Frank, it has been a lonely, lonely place the last decade being in the uranium business. It's not interesting for people. It has been out of favor. It's tough, man. Like, you're not coming to work every day high-fiving and rolling in and getting lots of media coverage, analyst coverage. But there's hardly any uranium analysts left, for example. So it's not easy. And so I think the only way to truly persevere as a contrarian is to be so passionate and committed to the cause and to the concept of being a contrarian to then really last. I think it's so much easier said than done, right? Yeah, of course it makes sense to be a contrarian. Everyone wants to be a contrarian, like go after something that's out of favor or a sector that's out of favor. But when those sectors or themes test you and you gotta just stay with it for way longer, that's when it comes out. So to answer your question, I absolutely relish the sectors I'm in. The potential I see in them are enormous. I've never doubted it, would never do it any other way. I hate the idea of ever looking back in my life and having regrets, and I don't have any regrets about any of it. Has it been challenging? Yes. But has it allowed me to build a place and grab market share for my companies, be it Uranium Energy or Uranium Royalty, or as you say, get my hands on royalty, for example, royalties on blue chip assets, or be able to pick up and team up with the best people at Uranium Energy, for me to get a chance to partner up with a former United States Energy Secretary, Spencer Abraham, who's the chairman of our company, who you've interviewed. If I was, let's say, one of 100 oil and gas companies, I wouldn't have been able to attract the unique people that we have, because we're one of 5 or 6 companies in the world that can mine uranium. The scarcity factor with being in the uranium business, with having production capabilities in the uranium business, with being able to get projects and assets at discounted valuations, I relish that. I love that. I do it all day long. And sometimes I get worried. I'm like, geez, if that bull market comes tomorrow, do our companies have enough assets? Shit, I bet we better hurry up and do more before this thing becomes mainstream popular. So anyways, I'll stop there.
No, you know what? And I'll end with this here. I always define character of how people act when things aren't going good, right? Because everybody wants to be your friend when things are going good. And examples as I was invested, I've done well in private placements I invested in. One was a cryptocurrency company. It was a crypto mining company. And in 2018, the market went to crap and my investment went to crap. And instead of really getting into the market and trying to build those assets and doing everything you can, they really sat on their hands. And now when the market turned around, they didn't benefit as much as everybody else. To see what you did and during those times, being with you, traveling, going to Washington, it's a testament to your character. I think words I would describe as resilient, courage, persistence, everything that becomes a winner. And, I'm just proud to really know you and see you through this and just see the success now. It's really, really cool. You're probably one of our longest guests on Wall Street Unplugged. And, I just want to thank you for coming on, man. It means a lot.
Thank you. I really appreciate that, Frank. That was an awesome interview, and look forward to coming back and doing it again soon. I just can't wait to the day where we're going to interview each other and you're going to say, holy crap, it's $100 a pound uranium. Like one of these days, that's got to be the interview, right? Like how many times have we interviewed and we're talking about $20 uranium, $25 uranium, $30 uranium.
No, absolutely. I wouldn't think we'd be so excited breaking 30, right? You break 30, like we broke 30, right? You never thought. It's just expectations are so low right now. So absolutely, man. Yeah. So thanks so much for coming on. And as always, we'll talk again soon, buddy. Thanks, man.
All right. Thank you. Bye.
Hey, guys. Great stuff from Amir. And I meant every single word I said. And character to me is defined on how you perform and how you treat people when things are not so good. Because everybody wants to be your friend all the time, right? When things are good, they want to be your friend. They love you. It's the people that reach out to you when things aren't that good. That's how you know who your true friends are. And I'm always a big guy in character. But to see how hard this guy works, I travel with him personally numerous times. And just seeing him work a room, talk to shareholders. He's one of the few CEOs you'll always see at his booth unless he's speaking at these conferences. His influence in Washington is incredible. I mean, he just has a way with, with really big institutions and investors. I mean, he met presidents, former Secretary of Energy. Spencer Abraham is a former Secretary of Energy, which we talked about, who's the chairman of UEC. And to work that hard as he did during those times when things are horrible, I've seen it. A lot of people just, crumble up and they don't care and whatever. I mean, he was just pedal to the metal, building his company, knowing that this is going to turn around. It might take longer than expected, and so many downs, much more than ups. It's not easy being the manager of a company and always worried about costs. And always worry about, you should always worry about costs as a business owner, but to the point where, we got to make sure that we're going to survive during a period that nobody really wants our product right now. But we know someone's going to want it later on, and no one's in this industry at all. But, if we keep doing what we're doing, we're going to be positioned as one of the best in the industry. And that's, what UEC is right now. But it's just a testament to his character. Personally, I learned a lot from Amir. He's a great friend. It's not why I put him in front of you. I put him in front of you because he will make you money. He's one of the smartest people I know within this industry, one of the hardest workers I know. And he always, always, always treats his customers first and his investors first. So for me, that's just, classic, great character and just a really, really, really good person. But this podcast is about you, not about me. Let me know what you thought at frankcurzioresearch.com. That's frank at curzioresearch.com. Now, bringing in the ultimate favorite, actually, best looking guy. I'm going to keep going. I'm going to give you so many compliments, Daniel.
We got plenty of time.
Plenty of time. So, Daniel Creech, welcome back to the podcast. Parents are in town, right? Which is pretty cool.
Yeah. Happy Wednesday, everybody. Parents are in town visiting here on Amelia Island the first time. It's been entertaining because I'm the worst host. I'm the guy that's lived here a few years, but they're like, hey, what about such and such? There's a fort right up on the north side of the island, Fort Clinch.
Yes.
Yeah. Never been there. They were asking me, hey, is that pretty neat? I don't know.
Yeah, but you do know every restaurant, every bar, everything. That
I do,
much more than I know.
Yeah. We've hit some bars up. Got to watch the timing of all that. You got to go during the daytime and get your island hops in. But yeah, it's a great time. The weather's been beautiful, and it's fun to play host.
Yeah, I made the mistake going golfing with you and your dad, but yeah, he kind of kicked our asses.
Yeah, he showed off a little bit. Made some putts.
Man, look at that guy.
Putting is the biggest Band-Aid in golf. You roll in some 20, 30 footers and life is good. So yeah,
I know. I hated him.
No, it was a lot of fun.
I was happy for him. Like, it looked like I was happy for him, but I really wasn't.
Notice we're not going anymore.
So let's get to, what's going on today. I guess just, George Floyd's such a big topic here. To me, when I look at this thing, Daniel, again, it's a top story every place. And people are like, hey, I don't know why we have to comment about it, because everybody, I think, was on the same side here. I mean, they act like, like something terrible was going to happen where he wasn't going to get convicted on everything. But, there's not a person that saw that video. I mean, the guy's in handcuffs and you have him stable, you have your knee on his neck, everybody saw that, and for me, the result was expected, but I was just surprised at how so many people believe that wasn't going to be the result. And for me, look, I'm glad it's over with. I don't know what CNN's going to talk about now and those guys are broadcasting every single minute of that trial, but for me, I guess I don't have much comments on it, but it is, one of the biggest topics out there. So yeah, I want to get your thoughts on it as well.
Yeah, I mean, it's unfortunately politicized like everything else in today's world, but it is what it is. I don't think anybody was defending that guy. If they were, I never heard anybody defending other than, his lawyers and the right to defend yourself and all that kind of stuff. But yeah, I mean, everybody, trying to do live shots and just the media gets as much headlines as they can. And hey, we're guilty of that too. We want to get headlines. We want to get people to click on our stuff and all that. But when you take a situation like this and just blow it out of proportion from the anticipation of what will happen, there was very few riots, if any. I know your Gotham City, New York City there, Frank, had some rioters, I'm sure, which makes total sense because everything happened in Minneapolis. So why wouldn't you do something in New York or California or whatever? So yeah, but hopefully they're not going to simmer down. They'll do something else. We'll probably get back onto the coronavirus. And then for the next 2.5 years, we're going to listen to the climate change fanatics again. And we're going to have to listen to how the island's going to go underwater and everything else. So yeah, I'm actually looking forward to that. We'll make money off the greenies. That'll be a lot more fun.
It's funny because making money off them was very easy about a couple months ago, but I don't know if you've seen the prices in some of these things.
I know it's going to get difficult.
And they're down 40, 50, 60%, some of these names. I mean, they've gotten crushed. And people, you see the markets at highs and it's, very heavily weighted towards the biggest companies in the world, and especially FANG companies with S&P and you look at the Dow price weighted index, whatever. But when you look at the underlying trends and you see where these companies have gone, some of these things, you have Virgin Galactic down 65% now. You gotta love Chamath too. I mean, he got out of that so freaking fast for a nice $250 million pop, and then what is it? I think it's $500 million for Branson. He still owns shares with Big D's out for $500 million. I mean,
yeah.
these SPACs are great. I mean, he's awesome. These guys are like, hey, if you're going to give us something on a layup, if it's going to be a layup, we're going to take it from you.
Absolutely.
And they've done it. So, I don't know if you get pissed off at them, but you're seeing that market really, it's a lot different now. And they're not going to find as many ideas, and you're not seeing the money come in, those pipe deals after, because you've inflated the valuations. A lot of that stuff is slowing down, definitely. But, just pretty crazy times,
Yeah, I mean, like you said, with so much money sloshing around, you're going to have to get into bidding wars for the same assets. And, they're nothing new. They've been around. I know you've talked about this in the past. But yeah, if you get in, it's great. I'm not saying it's a Ponzi scheme, but you definitely want to get in before the other investors and all that. And you want to pay attention to lockup periods and any kinds of deals that they have with insider shares, because it is just low-hanging fruit. And you cannot blame... if you go to a zoo and you get in the cage and you get bit and you're shocked, you're an idiot. I'm sorry, but that's the way it is. You don't go to one of those places and look at these wild creatures, and Wall Street is a cutthroat business. So you can't get mad. I mean, you can, but it does no good. So yeah.
Yeah, I just...
Eat some popcorn, watch it on the side, play with very little money if you just watch the markets all the time and you can't not do something. I get it. There's action there. It's fun, but yeah.
Yeah. I just think it's funny that the way these things are structured, the way it's just, I love when they're launching these things and they merge and you see how excited they are. This is the greatest thing ever. We're going to change the world. And just 4 months later, they're out. It's just, again, if you're going to give this to them on a silver platter, people, they're going to take it, and they're going to take it all day. That's what they do. And not only that, when you have less regulation, holy cow, is that dangerous when it comes to the wealthiest, because they want less regulation because they have the best lawyers. They know what to do. And there's not a lot of regulation around SPACs. And there's to the point where you don't know what those pipe deals are. You don't know where everyone's getting their stock. You don't know. It's hard to find the lockup periods. It's not like your typical S1 that you get an IPO. Things are much different. They're able to hide a lot more stuff. And that's very, very dangerous when it comes to Wall Street. And I'm not saying it needs more regulation, but I'm just saying it should be the same as other companies when you could really look through things and say, okay, here's the company, or what if company's IPO, you could see it. You don't know really what's going on with these names. You don't. And Sorkin on CNBC was actually, and I'm not, the biggest fan of his, but he actually did a good job questioning Chamath on some of these investments early on, and saying, okay, where are you in? Are you fully committed to here? Are you? And he just dodged the questions.
Yeah.
Which, he's smart and he's filthy rich. So
there's a lot of gray area there. You can't be specific because you don't want to be wrong about making $300 million when you're going to make $800 million. That looks kind of bad.
Yeah, I know. I think Virgin Galactic is supposed to be profitable right now. Yet they have, what is it? I think $200,000 in revenue. $200,000 in revenue. They're supposed to be profitable right now. It's incredible when I think about it. So let's move on here and talk about COVID. I mean, the stats coming out are absolutely amazing. Yes, we're seeing it spread, and I don't know what's going on in Europe, and I don't know if the vaccine is getting, I don't know if they're getting it as quick as us. We're getting it tremendously, but globally, we're closing in on 1 billion people. Did you know that 1 billion people?
I did see that headline. Yeah, that's a whole bunch.
I mean, that's incredible. And I know, whatever you take it, don't take it. I don't know, but I do know that there's a lot of garbage going on. And even when I look at the CDC, and you know what, Dan, I want to say this because a lot of times when I talk about COVID, people get pissed off for some reason. Like I have an agenda. I don't care about politics. I care about safety. I care about you, the customers, subscribers. Now, where do I get this information from? Is from leading doctors all over the place. This podcast has been downloaded in over 100 countries. And I can't tell you the amount of doctors that have emailed me and people, influential people have emailed me about stats. And they all say the same thing. Don't mention my name or whatever. But, I have emails here. And one of them emailed me, and I actually tweeted about this the other day when he says COVID cases in the USA are 32 million from 2021. So if you go over the flu cases in the US from 2016 to 17, kind of similar. 29 million, 17 to 18, 45 million, 18 to 19, 36 million, 19 to 20, 38 million. Again, we have 32 million cases this year for COVID. But what about the flu this year? There's 0.0015 million cases. Nobody got the flu. And they're like, well, it's because we were wearing masks. No, it's because this is a version of the flu. They can't tell you that, though. It's a worse version of the flu. We know the statistics. Okay, you're not saying that it's... If you're over 65, be very, very careful. My daughters were in school. We had it already, but we've seen other people have it in school, kids, and it hasn't spread, which is exactly what the statistics show. So you could open up schools. They don't, for some reason, we don't know why, but which is a great thing. It doesn't really impact kids. I think there's 12 kids, which is way too many, but 12 out of the million plus in California who died from COVID, which makes the flu more dangerous. And you're still seeing schools closed again for political reasons, but just the politics behind this, Daniel, I mean, it really pisses me off, but I never underestimate the power of brainwashing people and people getting completely brainwashed. And, I have relatives of mine that live in New York, and they have no clue. I mean, they got vaccinated, and we had it already. My wife and my family, we didn't get vaccinated, and I'm thinking about it. I'd like to see more studies come out. And I wasn't afraid at all of getting COVID. I'm a little worried about injecting 10x antibodies when I already have antibodies to fight this thing. I'd just like to see some certain studies. That's it, which is fine. I think that's normal before I do this. But we're supposed to go away with them, and they're like, oh, well, you need to get the vaccine. I'm like, well, you got the vaccine. And they're just conditioned, like, if these persons, we can never hang out with them, we can't do anything. But it's just, who are they listening to? They're listening to people that on television that are just scaring you, not looking at statistics. But the emails that I get here, and even another one from Canada, and this one was great, just the statistics and everything. It's not all like, like we're pro open up everything. I mean, for me, I thought everything should be closed at the beginning. But once the stats came in, Daniel, you're seeing this. And again, from the numerous doctors saying, please don't mention my name. We're not allowed to say this publicly. That's really insane. Isn't your job to say, and I know why they're not, but people are losing their jobs if they say, hey, I think this works and we've seen progress. No.
Yeah.
If that's not part of your agenda, no way. But I think people on both sides of the aisle are starting to see this because we're seeing states open like Florida, Texas, and yes, cases are rising a little bit, but still, we're open. Things are good. We're still practicing mask use in different stores, in Walmarts and supermarkets. Yeah, everyone wears masks in there when they go in, but just to see things locked up completely still and just the politics behind it, it's sad because you're fucking with people's lives, right? I mean,
yeah, absolutely. You're causing unknown and basically uncalculable terribleness going forward. The crazy thing here is that, just to your point you were talking about with Sorkin and Chamath a while ago, when he wouldn't get specific, and granted there is a gray area because, well, we're in at this amount and this amount, and we put so much money in up front, so I get that. But when people won't be specific, you just want to ask why. And Dr. Fauci is the same situation there. Jim Jordan, they were, everybody was playing political chess and going back and forth, and he was asking him specifically, hey, if everything goes as planned, give us a date. When are we allowed to take masks off? When is life going to get back to normal? And they wouldn't even give you a date. So remember, it went from 30 days to slow the spread, 15 days to slow the spread. We're going to lock down for 2 weeks. That was over 365 days ago. So I get you don't want to be wrong. It's nervous. It sucks. You have to admit it. But everybody gets it wrong. So when you have the quote unquote leading doctor, and I'll tell you the quote unquote leading doctor because I've always been a lot more skeptical than your average bear on this whole thing, because you look at data and you look at the policies and politics around it. Dr. Fauci won't answer a question. He was on CNN the other night, won't answer a question about when you can get back to life as normal, even if you're vaccinated and all this kind of stuff. The President of the United States said you can't even have a freaking barbecue to celebrate the Independence Day.
Outdoors, yeah.
Outdoors with a bunch of people. Maybe as long as everything... The irony is beyond hilariousness. But Dr. Fauci now is a gun control advocate because he was saying that gun control is a public health deal and we have to deal with it. So that just shows you if you were skeptical at all, and Fauci won't answer what he's supposed to be an expert on, and now he weighs in on the public health crisis and gun control, you know it's just complete BS. The guy just needs to get back in front of a camera, and I get it. I mean, I like being on the podcast. Maybe I'll change and be a babbling fool like everybody else is on some of those channels, but that remains to be seen. But yeah, it's all politicized. People need to get over this. The best revolution we could see is everybody tells the wannabes and goo-ditters to go to hell and open everything back up. Take off your mask, open up everything, and just ignore everybody, wave and smile. Kill them with kindness. How about that, Frank?
And I say this a lot, and I really mean it, because you listen to this podcast to make money on stocks. So, politics aside, do your own homework on this. I mean, it's just listen to somebody blindly, even myself. Do the research on it. I mean, the reason why I'm coming out with statistics, I'm not making this shit up. I mean, I would say... When it came to COVID, I mean, thank God I had the sources I had. I mean, it helped us out tremendously. But it's amazing how many people just believe a news anchor on any channel without doing any of their homework themselves. And now, unfortunately, if you try to look, because I looked at what Fauci said at the beginning, and I wanted to see what he said compared to what he didn't say. And when I looked at that in May, again, he was like, no, we're not going to close anything down. And again, I'm not just criticizing him because nobody knew what this actually was yet. So I found all the dates of everything and all the things that he changed, along with, Trump and everything, right? Just comparing to what everybody said because you want to be accountable compared to what they're doing now after learning about the data and all that stuff. If you try to look at that now, Dr. Fauci and the things he said wrong, Google suppressed it. You can't find it. If you want to look at Fauci saying we don't need masks, if you try to Google that, you're not going to get anything. He said that, right? I mean, a lot of people said that at the beginning, which is fine, but they're suppressing it to the point where you can't even do research on it. And that's what's pretty scary. That's what's really scary because now we're finding out how much these guys bullshitted us, and that's fact, right? It's not 6 feet. There was never science behind it at all. Again, unless I spit comes out of my mouth into your mouth, that's the only way you can get it. Why do you have to cover your nose for? Am I going to blow mucus out of my nose into your mouth? Why do I have to have my nose closed? No. Are you going to be? Is it 3 feet? Yeah, but most of the time when you're within 3 feet of someone, it's somebody that you know. Right? It's not strangers and stuff like that. Very, very rare you're inside 3 feet. Unless you're, at a concert or something like that. But now it's 3 feet. Now, surprisingly, it doesn't live on surfaces. Think about that for a minute of everything. I don't know if you've gone to Disney in the last 6 months since they've been open. Every other, they'll have, people go on the roller coaster. And then when it comes back, there's another one behind it. But that one that's there, they spray the whole thing down. They spray everything everywhere. But it doesn't live on surfaces. We just found that out. How don't we know this shit? I mean, just the lies that we've been told, and just during a season when you're supposed to vote and everything, and you can't go. There's no way. Don't even think about going to the polls. Don't even think about it. You can go get whatever you want at Walmart. You're going to be perfectly fine. Don't go to the polls, though. Don't. Just mail in your vote. You're going to be fine. And I'm like, come on, really? Are you kidding me? So I get it. I understand it, the strategy behind it. But, we're talking about lives here. We're talking about kids. Now, I mean, my daughters were significantly behind. They were in school. Kids aren't in school, man. They lost a ton. I mean, you're just seeing the statistics start to come out now with suicide rates and depression, anxiety. And really, Biden, you can't go to a barbecue outside with your family? Like maybe you can in 2 months from now? Are you out of your mind? Really? Come on. You can't be that stupid. And he's not that stupid. No, he's just, again, the more you can control, the better it is. But yeah, now we're finding out that, hey, you know what? This is a bad version of the flu. It sucks. I got it. It wasn't the worst I was ever sick, just like 99% of people that got it. It is dangerous, but we know who it impacts. I mean, this is a serious disease for certain people. Those are the people we need to protect. You didn't need to keep everyone in the world at home this long. And the fact they're still doing this, I mean, dang, I'm going on here, but look at Europe. Look what Europe did. Look at everybody in Europe. Look at them now. Who's the example now? I think we are the good example of how it was supposed to be done. Because you look at all these other places, they're still on lockdown. I don't know what they're doing over there. I have no idea.
Yeah, I mean, yeah, it's ridiculous. We've beaten this horse. What else? I'm with you. Germany's still locked down. It's crazy. It's sad, but hey,
it is,
we can't control that. We can only complain about these cats.
So why bring it up? Because it's affecting the reopen trade. Because now you're seeing airlines down 10, 12% off their highs after running considerably higher because they're dependent on that international travel. And now they're saying it's not going to return back to normal a lot longer than expected when you're looking internationally. So remember, a lot of our profits come from S&P 500. I think it's 35% of those profits come from overseas, where you still have things closed. That's a big problem.
Yeah.
I mean,
it definitely affects the reopen trade, and you have to kind of balance that. But so much of that I feel is baked in to a lot of prices here. I mean, they're obviously looking at that with a glass half full, markets knocking on all-time highs, et cetera, et cetera. But yeah, it's aggravating that you're going to have to deal with headlines like this and kind of take that in consideration. But, airlines, certain sectors are going to get whacked or just slow recovery. So, we'll continue to follow those. But at some point, massive shifts will occur, and hopefully we can get ahead of that and make some subscribers some money.
All right, last thing I want to talk about is earnings. It is earnings season. We saw banks blow it out of the park. We're seeing a lot of companies blow it out of the park as expected. The average gain in these stocks at the earnings beat is 30%. If that holds, it's going to be the largest increase or the largest beat ever since they've been keeping track of this thing. And again, I think it dates back to it's FactSet 2006 or 8 or something like that, which is insane. But again, the banks reported those are the biggest profits, but also oil companies are reporting massive profits there now because, there was just such big losses. But, you look at a company like Netflix, it just came out, and everyone's like, these numbers are horrible. I mean, to me, I don't know how they were going to add a ton of people. And yes, that number is lower than I thought it would be. But just to see this come down the way it is, where we're looking at companies that are beating, Lockheed Martin beat by a lot. We saw Procter & Gamble beat by a lot. All of them said, higher costs, and they're raising prices and whatever. And outside of IBM, which was a super depressed name that beat and the stock went higher, but these other names that have ran considerably higher, that reported and beat earnings by a mile, have come down. And then you have the Netflixes that came out with earnings that didn't meet expectations and subscriber numbers didn't meet expectations. And that thing got hit pretty hard.
Yeah, I saw those numbers come across briefing yesterday. And if I had to guess, I would have thought the stock was going to be down a little bit just because they missed on the added subscribers. So I know that's the big headline there. But if you look through a couple of the talking points, margins are going higher. They're talking about buying back shares to reward shareholders. They're going to manage between $10 and $15 billion in debt. They already announced that a quarter or maybe 2 quarters ago that was going to be their plan going forward. They're amazing, though. They're getting a ton of. They're about to release a lot more seasons of different popular episodes or shows. I'm not a huge Netflix fan myself. I don't even own a TV, but a lot of my friends love Netflix, and you can have more than one thing. I like how they talk about competition. I mean, if you're an analyst, you got to ask, hey, what's Disney doing? What are you seeing on Hulu or YouTube and all that? But one of the talking points they said on their conference call was, yeah, these guys have been around. I mean, Disney is newer on the streaming side, but they've been competing with these people for years and years and years. They have excellent shows. They increase their margins. They increase their prices. And I know you had a big, good rant on inflation at the beginning. So you want to look at companies like this. How often do you see a stock drop 10% and the following morning you have analysts coming out and upgrading the stock? Screw the net ads number. Who cares? I mean, to a certain point, I get it. You got to pay attention. But they're raising prices. They're increasing earnings. They're going to manage their debt and cash flow going forward. And now they're talking about rewarding shareholders. That's great. It'll be interesting to see if that theme sticks. If you only want to see growth and you don't reward companies going higher because of something like this. But this was a great play. I thought this was a solid earnings, and I think management's doing a real good job there. So
they guided earnings higher.
Yeah.
Right. So they guided earnings higher. Their net operating margin, 27.4%, much higher than expectations. But just if you look at a year ago, operating margins, 16.6%. Guys, that's a really massive increase. I mean, you would see year over year 16.6 to 17.6, 18 would be a huge. No, I mean, to go that high is showing that they have people who love that platform, that they could easily raise prices. They successfully have done that. But we have to see if the model changes, because it's the same with Twitter. And it was the same with IBM. I mean, IBM, it was revenue, and revenues declined tremendously over a period. But the earnings growth was enormous because, their revenues declined because they got out of these freaking shitty businesses that was, cost them a fortune where, yes, they were generating a lot of revenue, but the cost to manufacture that it was even higher. So they got out of that business, got into cloud, higher margins, and their earnings surged. But that now revenue's back into play, and revenue's going to increase, and maybe that's why IBM went higher. So there's always a different metric, and here it is subscribers. So I'm interested to see what Disney's going to report. They're going to report a big increase in subscriptions because they're giving the shit away for free. So I get it, but at the end of the day, in this type of market, Twitter too. Twitter got hammered because they weren't adding. They got to what was it, 300 million, I think. People on Twitter, and it was just a number they really couldn't get over, whatever it was. But if you look at their earnings, they skyrocketed. They found out how to monetize the list, and earnings just took off. And it took a while for people to understand that. And those numbers really matter. Yes, you want to see growth in subscribers, and it's going to be more future money down the line. But I would tell you this about Netflix: I think it's a screaming buy here because there's one thing that I know for a fact as someone that's been covering the stock for a while, and I've missed it, and that's Reed Hastings. Reed Hastings is a Michael Jordan of Wall Street. This guy never
dropping the MJ.
He never loses. He never loses. He never ever loses. Everybody that's doubted this guy from the day, and we interviewed guys. Listen to that interview with Mark Randolph, who's a co-founder of Netflix. He still owns shares, he said. But that meeting, you can look up this online. It's a great story with Blockbuster, and Blockbuster laughing at them because they had high costs, and this was right after the bubble crash, and they went in there and said, our company's worth a lot more than it is. And Blockbuster left him out of there. And he said, okay. And he went back and said, now we're going to have to destroy Blockbuster. And he destroyed Blockbuster. And I got someone who's listened to those conference calls. Think about this when you listen to conference calls. You get the CEO on and they're talking about what they did. Here's what I'm doing. All this guy talked about is Blockbuster. That's all he talked about. How Blockbuster's terrible, how we're beating them, how we're doing this, and this. And it was just the whole thing was dedicated to Blockbuster. And then whenever someone enters this industry, which we've seen for the past 6, 7, 8 years, these guys are always the competition, that's good. It's building streaming or whatever. But the people that doubted this guy and thought that the cable companies would crush them, and now look at everybody getting into streaming. Right now is a competitive, right now, I think this is the best thing to happen because the competitive spirit is back, and he's going to show why everyone in the world, why this is the greatest streaming platform, why nobody's even close, not even Disney. I think it's a great buying opportunity for Netflix here. I mean, yes, those users are coming down. They're going to be buying stock, which is going to support, downfall a little bit here if it pulled back even further below 500 or whatever it is today. But these guys have the best content. Everybody wants to work with them. Every actor, which is the key to all this stuff, the greatest actors all love working with Netflix. They all love, again, these guys do the right thing to everybody, and everybody loves them in terms of the people that they need on that platform. And man, I just think it's going to be an incredible buying opportunity. And just because of Reed Hastings, I think he's that competitive. I think he's going to go nuts. I think he's going to really accelerate and distance himself from Disney going forward, even though Disney's adding a lot of subscribers. But, they're going to be taking massive, massive losses in doing so. But anyway, pretty good earnings season thus far. And real quick, which was interesting, man, I thought it was really cool, is did you see that the Canadian National Railway and Kansas City Southern and Canadian Pacific and that whole thing go down? Holy cow. So basically you had Canadian Pacific, a bid for Kansas City Southern, and it was kind of a done deal. It was a done deal. It was okay. I think it was $275 or something like that. And out of nowhere, Canadian National Railway came in and said, we'll give you $325 a share. And just looking at what's going on in this business, how it's so amazing, right? You're not going to see more railroads built or anything. These guys constantly just do transportation, making a fortune. But just to be a company that you're all psyched up about, and then you're like, wow, this is going to be great for us. And then someone to come over the top. It's going to be interesting to see where this bid is. And again, just signs of a bull market here and a top almost. When you're seeing that much of an outbid, I was just surprised.
Yeah, it was a 21% increase from the previous bid. So they bumped it up. I think it jumped from, basically 25 to 30 billion. What better timing for you in inflation? Because you want to own real assets during periods of inflation. Inflation is here in a lot of different aspects. It will get a lot worse. Not because we have a crystal ball, just because of the policies that we're creating and implementing, world governments all over. So you want to own these assets before all that really kicks into place. Nothing more hard assets than railways. You have to ship everything, no matter whether you have high demand or low demand. They got to move. So Buffett, again, looks brilliant. I know it's a huge capital intensive business, meaning no matter how much revenue you're making, you are pouring billions of dollars back into this company to maintain rails, cars, all that kind of stuff. But Buffett looks good again because, basically he bought, was it BNSF? years ago. A lot of people made the same argument about getting ready for inflation, and they're going to have pricing power. So that's, I don't think it's a coincidence that you have this bidder. Either one of these, Frank, did you see the headline or the stat that if either one of the mergers work, it'll be the first Canadian to Mexico connected railway, I guess, or, company. Yeah. So that's kind of wild.
No, it is wild. No, it's good stuff. And just, I know when they sign deals like this, there's always like a termination clause, or if somebody comes in, it's $100 million or whatever, $50 million. I don't know what it is. I got to see what that
Take
is.
A guess.
That termination fee.
Take a guess.
Do you know it?
Yeah. It's in the Wall Street Journal here.
How much are they bidding for it?
Well, I'm talking about the first.
Yeah. The first bid was for what? Because that's the way
25-ish, 25 billion.
So 25 billion Canadian Pacific. I would say 200 million.
I saw 7.
Are you kidding me?
Yeah, where's 7 at?
Oh,
hell no! I don't have
wrong.
I don't have the Wall Street Journal right in front of me.
It's only 7. What's 7 million to this company?
Let's timestamp. No, 700.
Oh, 700.
Yeah.
Oh, I thought you said 7 million.
No, 7. I meant 7. You were like 100. I was like, no, 7. 700.
700. Yeah. Oh, that's better, because I was like 7 million.
Now we need to timestamp this because show you how unprepared I am. I had that with me and I must have not grabbed it. So if that's completely wrong, I'll come back and admit it. And everybody can poke fun at me. But yeah, it was
Canadian
huge.
Pacific, they're, you'd think they weren't in the driver's seat, but 700 million is a lot of money for doing nothing. Basically, you just, you spent whatever, $5 million on hiring Goldman Sachs or whoever to put this whole entire thing together and structure it, or Morgan Stanley. But at the end of the day, that money is for free. You just got that. It's like a settlement, right? So
look at this. That's breaking news, Frank. We're on the money here. Canadian Pacific would have a chance to match it or walk away with a $700 million breakup fee.
The breakup fee. Oh, that's incredible. That is a nice number. And that's what you do. If you're a business and you're buying, you don't want competition to come into the market. There it is. But Kansas City Southern is in a great position. And Canadian National Railway, if they're going to purchase that, they have to include that $700 million, that price tag, right? So, yeah, that is interesting. And it's just, it's funny how it was that much. I thought it was going to be very, very high. Yeah, that was funny. So, all right, Dan, thanks for stopping by, buddy. Love talking about just relevant, everything that's going on right now, and getting positive. What's your email again? This way,
Daniel at CurzioResearch.com.
I love it. I love it.
DANIEL.
Especially when you talk about politics, all those things coming in. I'm sick of getting them, so I don't have to forward them to you anymore. That's Daniel with a D.
Daniel with a D. Like doctor.
Get those emails over. Oh, that's so great. Well, thanks so much, man. Thanks for stopping by, brother.
All right, see y'all next week. Cheers.
All right, guys, last thing here. We're taking crypto intelligence offline soon. So we did cut that price by 50%. Great stocks in that portfolio. We've done tremendously. As I told you, that I think, we're going to see so many disruptions in that industry, things that we're seeing, even security tokens and some of the stuff that's going on. We just have the biggest capital raise from a security token company ever, which is awesome. So we're seeing that industry develop, and having access to so many of these things is really, really cool. And you could see by the interviews we have too. It's just, with BlockFi and major company, $3 billion company, blockchain.com is advertising with us. It's a $5 billion company. So, that's really cool. So just the context in that industry is helping us find new ideas like crazy. And it's working, and it's awesome, and we're very, very careful too. So you're not going to see us, if we're buying something that's up a little bit, and yes, a lot of this stuff has gone higher, we're taking small positions, adding over time, and we're very careful in our due diligence of all these tokens, because there's so much bullshit out there. You really need someone that knows what they're doing, and it's sad because I know some people that write these things do not understand what's going on. And in a bull market, it's fine, but in a bear market, a lot of these things are going to get destroyed. Instead of getting destroyed, it'd be nice, hey, let's add to some of these good things, and it's we teach exactly how to invest everything right from scratch. So it's really cool. We have so many new subscribers that came in. I want to say thank you. And I think you're going to be very, very happy over the years because the dedication, the research. I do 40-minute videos just teaching you everything. Just start learning about it. Even if you don't subscribe to our newsletter, take advantage of it. Start learning about cryptos. I don't know if Bitcoin's going to be the winner or not. Maybe it is. Maybe it's not. Right now, of course, it's the winner. But there's just going to be so many developments within blockchain, within crypto. You saw the DeFi movement. You saw NFTs. Everything is going to digital. You've seen all the biggest banks in the world now start partnering with a lot of these specialized companies, which we benefited tremendously from, who are in this market, and full crypto service companies. But this thing is here. It's now probably, see a little pullback. That's absolutely awesome. It's going to give us a chance to find lots of more ideas, but really exciting times in that. And thank you so much for so many people subscribing. Again, that's a 50% discount at CurzioResearch.com. It's a banner on our site if you want to subscribe. If not, this week it is going to end. So I just wanted to bring that up as our last thing here. So guys, that's it for me. Thanks so much for listening. Thanks so much for all the support. I mean, just, the amount of people downloading this podcast, it really just allows us to get almost anybody we want on this. So if you have any ideas of who do you want on this podcast, get frankcurzioresearch.com. We got amazing guests coming up. Really, really cool. So really exciting times. And again, I just want to say thank you. And I'll see you guys in 7 days. Take care.